Millions of dollars in real estate equity sit dead and dormant across the United States, trapped inside legacy property structures that yield a meager 3% return after inflation and property taxes. While traditional landlords accept this capital inefficiency as standard operating procedure, high-ticket solopreneurs are deploying the yield vault. Welcome to the engineering framework that extracts hyper-liquid, automated cash flow from locked real estate assets using decentralized smart contracts and synthetic yield engines. The core bottleneck of conventional real estate investing is asset illiquidity. When your capital is anchored in physical brick and mortar, accessing cash requires months of refinancing paperwork, costly appraisals, and high-interest commercial debt. Traditional finance keeps your wealth locked behind bureaucratic walls, restricting your enterprise velocity and exposing your portfolio to compounding macroeconomic risk. To unlock this trapped capital without triggering taxable events or selling your underlying assets, we deploy automated yield vaults. These modular smart contracts wrap your real-world property tokens into over-collateralized liquidity pools, allowing synthetic capital to stream continuously onto your balance sheet while your core asset continues to appreciate on an unyielding loop. Security and counterparty elimination are mandatory within sovereign yield architectures. When routing liquidity through DeFi lending protocols, third-party insolvency risks can jeopardize your treasury. By utilizing multi-signature governance vaults and algorithmic risk mitigation parameters, your capital remains strictly under your direct cryptographic key management at all times. Capital efficiency transforms entirely when powered by automated smart contracts. Instead of waiting 30 to 60 days for a traditional commercial bank to approve a home equity line of credit, decentralized liquidity protocols execute over collateralized stablecoin loans atomically in seconds. Settlement friction drops by 98%, giving your business instant purchasing power. Inflationary pressures continuously erode standard fiat rental income, forcing landlords into constant cycle updates just to break even. Inside the yield vault, capital is algorithmically reallocated across decentralized money markets, dynamically adjusting interest rates based on real-time Oracle feeds to ensure your cash flow outpaces core inflation by a wide margin. Manual portfolio rebalancing introduces human error and administrative drag. That is why high-ticket solopreneurs integrate autonomous AI execution agents directly into their vault architecture. These synthetic managers monitor global interest rate variances, liquidity depth, and protocol health metrics on an ongoing loop, optimizing yield generation without human intervention. Geographic borders are completely irrelevant within the decentralized yield ecosystem. Traditional real estate income is restricted by local banking regulations and regional currency controls. The yield vault bridges real-world property equity directly with global liquidity pools, enabling seamless cross-border capital routing and multi-currency yield optimization in a matter of seconds. Every intermediary in the legacy lending and refinancing stack, from commercial brokers to bank underwriters, extracts a permanent fee from your cash flow. By replacing human bureaucracy with immutable smart contracts, your net margin retention on asset yield expands past 90%, turning an illiquid holding into an elite cash-flowing engine. We have exposed the severe capital inefficiencies of locked real estate equity and established the foundational architecture of the yield vault. But structuring the vault is only the initial phase. In the next block, we will deploy the advanced software stack required to automate your liquidity loops. Stand by for part 2. To construct a bulletproof yield vault infrastructure, your smart contract codebase must be meticulously engineered. High-ticket solopreneurs deploy advanced development frameworks like Hardhat and Foundry, integrating automated testing suites and formal verification tools to ensure that collateral liquidation logic, debt ceilings, and interest rate models remain entirely infallible under extreme market stress. Traditional home equity lines of credit require weeks of invasive financial background checks, property appraisals, and institutional approvals. Within the yield vault framework, cryptographic proof replaces institutional friction. Zero-knowledge protocols verify your collateral health and asset valuation instantly, securing liquidity access while maintaining absolute privacy from corporate surveillance databases. Let us analyze the mathematical expansion of capital velocity inside a yield vault. When you extract synthetic liquidity from your real estate holdings and redeploy it into automated, delta-neutral yield strategies, your overall portfolio cash-on-cash return multiples skyrocket. While traditional landlords net a flat 3%, sovereign vault operators compound returns exceeding 25% annually. Counterparty risk management is the core pillar of long-term wealth preservation. Storing your capital within centralized lending platforms that can alter terms, freeze withdrawals, or suffer structural insolvency during a market correction is an unacceptable vulnerability. Yield vaults built on self-custodied smart contracts ensure your underlying collateral never leaves your direct cryptographic control. A yield vault does more than just supply liquidity, it establishes an autonomous cash-flowing ecosystem. Because your tokenized real estate equity is integrated directly into decentralized money markets, interest payments and yield accruals deposit into your treasury on every single block, creating a continuous, unyielding river of operational revenue. Geographic rigidity is a fatal flaw for conventional real estate holding companies. If regional tax codes or commercial regulations become hostile, moving physical assets is impossible. Yield vaults decouple your equity from geography, allowing you to route liquidity across global validation nodes and adjust your jurisdictional footprint instantly. As central banks continue expanding fiat money supplies, traditional cash savings and fixed income assets face structural annihilation. Yield vaults anchor your enterprise capital to productive, hard asset equity combined with algorithmic DeFi yield, providing absolute immunity against currency debasement and soaring inflation. Deploying this infrastructure permanently elevates your professional standing. You stop functioning as an overwhelmed property manager chasing late rent checks and dealing with maintenance emergencies. You operate purely as a system architect, managing yield protocols and optimizing capital allocation while your automated tech stack executes background operations. We have successfully mapped the transition from dormant real estate equity to hyper-liquid, automated cash flow generation. You understand the smart contract architecture, the risk mitigation mechanics, and the elimination of traditional lending friction. But maximizing this framework requires our final operational sequence and master toolstack deployment. In the final block of this masterclass, we will assemble the complete software ecosystem, analyze the long-term compounding advantages of yield vaults, and deliver the definitive closing action plan. Stand by for Part 3 as we finalize your transformation into a sovereign yield architect. To operationalize the yield vault, you do not need a commercial banking relationship or an institutional lending committee. You only need a precision-engineered technology stack. Hardhat and Foundry manage your smart contract architecture, Chainlink provides decentralized price feeds for real-time collateral health, and multi-signature vaults execute absolute self-custody over your liquidity streams on an unyielding loop. Examine the 12-month compounding projection of a sovereign yield vault portfolio. While traditional landlords remain trapped by tenant friction, maintenance overhead, and 3% returns, solopreneurs utilizing decentralized liquidity scale their cash flow with near-zero friction. Your capital compounds exponentially, accelerating your timeline to absolute financial independence. The legacy commercial banking model for real estate equity is mathematically and operationally obsolete. Trading your finite time and energy for illiquid property trapped behind traditional lending constraints is a high-risk gamble. True economic security belongs exclusively to the system architect who owns the underlying code and the direct yield vault architecture. Remember the ultimate objective of this architecture: reclaiming your time. Capital is merely stored human energy. By replacing bureaucratic loan officers and commercial intermediaries with automated smart contracts, you remove administrative friction from your existence, securing the rarest luxury of the modern digital era: absolute personal autonomy. While traditional real estate investors remain bogged down by refinancing delays, interest rate shocks, and tenant management, you operate with unmatched velocity. Your yield vault infrastructure allows you to reallocate, scale, and optimize your cash flow globally within minutes, entirely bypassing legacy market gridlock. You no longer require validation from the legacy banking matrix. You do not need commercial loan approval to command a high-yielding empire of assets. When your smart contracts execute autonomously in the cloud to generate secure, unassailable yield on autopilot, your on-chain ledger becomes your permanent proof of sovereignty. The blueprint for the yield vault has been completely revealed. You possess the structural framework, the code stack, and the cryptographic shields. The illusion of safety inside the legacy banking trap is officially broken. Subscribe to this channel, activate your notifications, and write "Vault" in the comments below to lock in your execution matrix. We have engineered the ultimate framework for modern asset sovereignty. From exposing real estate illiquidity and constructing automated liquidity wrappers to bypassing commercial lenders entirely, you now hold the complete master plan to decouple your cash flow from centralized manipulation permanently. Yet, as your sovereign portfolio scales and your on-chain capital channels expand, you will encounter an advanced macroeconomic landscape defined by cross-border routing rules, multi-jurisdictional residency shifts, and the evolution from a digital solopreneur into a global asset allocator. The pursuit of absolute independence never halts. To ensure your digital infrastructure remains impenetrable before the next major systemic shift occurs, you must master our foundational automation layer. Click on the video appearing on your screen right now, where we break down the exact operational scripts to scale your sovereign enterprise.